Okay, good day everyone. This is Mapletree Industrial Trust first quarter FY24-25 financial results dated 25th July 2024. Right, at first glance the results look good. Okay, so NPI is up year on year 1.3% for this quarter. Distribution to unit holders up 3.7%. DPU is up 1.2%. Alright, so these are the year on year results for this quarter. Right, average portfolio occupancy is increased quarter on quarter. That means they're comparing fourth quarter last financial year to this quarter, which is the first quarter of this financial year, right? So it's barely improved lah. So I don't think this is very impressive. Plus, it's actually overall quite low, right? You can see it's below 95%, which I think is a benchmark for very good demand. Right, positive rental revisions across all property segments in Singapore, so clearly a good thing. Right, and you can see Singapore is doing very well lah. Okay, higher average rental rates for Singapore portfolio. Right, will increase quarter on quarter, 4.4 years to 4.6 years. And they have finished the phase 3 fit-out works for Osaka data center. So I think there will be more contributions from this data center in the near future. Right, so you can see DPU is quarter on quarter hasn't been doing too well in the last few quarters, alright, at least with the rising interest rates, right? But looks like the last 4 quarters or so show a slight uptrend. Right, let's look at more into the details. Right, net property income increased due to revenue contributions from Osaka data center. Right, loss partially offset by loss of income from North American portfolio from non-renewal of leases. Right, so yeah, I think I mentioned in my last presentation, I'm a bit concerned about North America, right? Supposedly they're all data centers with very high demand, but somehow some of them are not being renewed, alright? I'm not sure if the big tech has been building their own data center, or the data center is not updated enough and they may require capex to update the data center. And of course there's some effect from the divestment of this property. Right, higher property operating expenses, utilities, okay, this one I understand, but marketing cost is a slight concern. The fact that you have to go and market your properties probably shows not very high demand, alright, at least in some parts of this REIT, alright. Borrowing costs, alright, we see came down, alright, primarily due to repayment of loans with proceeds of from their equity fundraising exercise and the divestment of Tanglin Halt cluster. Right, however, there's some more additional interest expense occurred for the Osaka data center loans. Right, so this one I'm not too concerned about it because while it looks big, right, 45.9% change, but really it's $2 million. Right, and this one I look at the past few quarters, this is not an exceptionally high figure. Right, so I didn't bother to discount this value lah. Okay, assuming that we are concerned that this value is artificially propping up the DPU, right? So I just left these numbers alone. Okay, so it's due to this effect whereby there was some distribution we held in the last year's first quarter, right? And now it's being returned to the DPU. Right, so anyway, here distribution to unit holders, alright, on paper is 1.2% up, okay, however, if you look carefully a bit, right, I'll try to make this a little bit bigger, sorry, okay, yeah, right, so if we look carefully a bit and we take out the one-offs, right, so this one is quite propped up by a lot of one-offs, like this divestment gains from this Ayer Rajah Crescent as well as tax exempt income, right, so these two are actually propping up this number. So if I remove them, right, then this is the actual distribution to unit holders. Right, to be fair, I did the same thing for this quarter, alright, and I removed this $3.35 million, right, so this is removing the one-offs, right, so if we remove the one-offs, right, distribution to unit holders in cents will be 3.31 cents versus 3.16 cents. Right, so this is a 4.7% increase lah, which is better than what they reported. Right, so actually I think the performance this time around is actually quite good and maybe even better than what this 1.2% suggests. Right, however, quarter on quarter, right, remember this is this quarter versus 1 year ago, the same quarter. Right, however, this quarter on quarter, the latest quarter, right, it's actually down 1.4% because last quarter there wasn't any divestments to boost this figure, right? So I did the same calculation, right, and yeah, I actually realized that actually without the boost from this gain, right, the DP will be 3.31%, which is 1.4% down, okay, rather than 2.1% up. All right. However, this is I think okay-ish still, right? Yeah, NAV nothing much to say, is flat. Aggregate leverage ratio at 39.1%. I'm not too worried about this because their interest coverage ratio is very high, right? But in case you're worried, I did a calculation. So their gearing is 39.1%. Their total debt is 3154 570 thousand, which means that this is 3,154 million. All right. If I plus the perps here, all right, this is the total debt, right? So this is debt plus perps, right? And I recalculated the real gearing using this formula, all right? So it's around 42.8%, right? So if you want to include perps in their gearing, all right, it's 42.8%, right? Which I think is okay because of their high interest coverage ratio, as you will see later, right? I think no more refinancing this year, which is, well, I don't know whether it's good or bad because supposedly I think more or less it's confirmed interest rate will drop given the recent happenings in the financial market, right? So maybe it's a bit sad there's no more refinancing, but I would say that I think one of the good things about Mapletree Industrial Trust is that they're actively trying to recycle their portfolio. That means to say sell properties, and one of the things they mentioned in the last or at least I mentioned in the last presentation slide was the REIT actually mentioned that a lot of their properties they're trying to sell, they can't sell for the price they want because interest rates are too high. So if interest rates drop, right, I do expect that there's more movement in terms of portfolio renewal. So actually, I think that is the net positive from interest rate dropping for MIT, more so than the interest rates dropping their bank loans interest rate. Yeah, if you get what I'm trying to say, right? Because for Mapletree Industrial Trust, they supposedly have access to Japan's lower interest rate. However, lately, Bank of Japan seems to be interested in raising their interest rates, so they're not going to benefit so much from that anyway. So I'm not sure that they will actually benefit from lower interest rates that much. They will benefit, but I don't think it's that much. Probably they'll benefit more from their property recycling. That means they can sell their properties at higher price, right? That's just my rough guess, all right, based on what I know. Right, so anyway, yeah, I was thinking that this was rather unfortunate given that I think the rate cycle may, the interest rates may drop a little bit quicker than we anticipated earlier. All right, that's what I think lah. Okay, may not happen. All right, but for them they're quite safe. Right, so 4.3 times adjusted interest coverage ratio, which means that this includes paying for their perpetual securities. All right, so very strong. Right, not worried at all for this REIT. Right, I don't think I have too much else to say. Maybe we just have a look at the outlook. Right, the outlook looks good. All right, yeah. So like the data center, I think this should help contribute more to the next quarter's DPU. Right, so yeah, I don't think there's too much to say about this. Singapore looks steady. Right, we'll probably grow at 2.9%. Or something to that degree. All right. US is the one where they look like they have very strong demand for data centers. All right, there's record tenant demand. All right, but I don't know why MIT doesn't have such a high percentage of occupancy in North America. Right, there are two main demand places: public cloud providers and AI companies. Right, and this further reduce leasing availability, right? Putting outward pressure on rentals and average asking price for the data centers, right? So yeah, this looks very positive for America. So I think in general MIT looks good, right? Japan also looks like they have strong demand. Okay, yeah, I think that's all for my presentation. Right, remember none of this is financial advice. Please do your own due diligence. Right, and thank you for listening.